So today's topic is mark to market, okay, and the pros and the cons. It is so hard to give you pros and the cons when everyone's situation is so different. But what I can bring to you in much more clear steps is how to get mark to market done for 2022. You know, I know we're in 2021. I know we're at the end of 2021. So let me tell you, folks, if you haven't really done anything for mark to market and you're thinking about, oh, when I do 2021, I'll do mark to market, you are late. So right now it is time to plan for 2022. So here we go. And the mark to market and pros and cons. And I always cover introducing myself and letting you know that I serve on National Taxpayer Advocacy Panel, and this is a Federal Advisory Committee to IRS. And also letting you know that there is a book of mine and on Amazon.com, and these 8 a.m. and I'm working on 10 p.m. as we speak. So 8 a.m. is starting up a business, but 10 a.m. it is how to grow your business. All right, no responsibility disclaimer, and this is going by our corporate insurance policies as well as corporate attorneys' advice. It need to be here. So folks, and make sure that you take responsibility for what you learn on the internet. Now, what is mark-to-market election? Okay, mark-to-market election is not anything new. It is becoming law back in 1993. And this section of 475F, which is the election to market, that was in 1997. But of course, back in 1997, the online trading is not so much so yet. So it is really becoming much more significant, much more a knowledge that ordinary folks need to get to know, because this online 24/7 trading had made day trader possible, had made everybody with the ability to trade in excessive order and becoming qualified as a day trader. You know that you cannot elect mark to market if you're not a day trader or trading securities and on the full-time basis. Okay, so you can say that, oh yeah, I trade so much, I am day trader. Yeah, that is a benchmark that IRS uses to determine whether you qualify to be a day trader. Obviously, that's not the only one. So make sure that you understand mark to market is not for everybody. A mark to market is for those who qualify to be day trader. And if you are qualified to be day trader, you have a choice to leaving your investment account the way it is, or you select a different way of accounting your result. That is mark to market. 475F election created a special tax break for traders that allow them to avoid the $3,000 loss limitation by electing mark to market. Okay, so what is the 3,000 limitation? So if you are a regular investor and you have a loss of, say, 300,000 trading loss, what happened to you? If you don't have a trading gain to offset that 300,000 loss, you can only deduct 3,000 of it every year for the next 100 years. Okay, so that doesn't sound very attractive, you know, especially if you lost 300,000, you only can allow deduct 3,000, and that just doesn't seem to be helping. You know, you lost that much money and you can deduct it. So that section 475F resolves that by saying, okay, you can do mark to market using market value at the end of the year to calculate your gain or loss as a regular business gain and loss. And allow trader to recognize the value of the security as if they were sold for those security were sold for their market value on the last day business day of the year. Okay, then you can subtract. So let's say I sold for 300,000, but I subtract the original basis in the stock from this fair market value. Let's say original basis is 200,000. Then that means my regular gain is 100,000, right? So because you got a 3,000 minus 200,000, you got a 100,000 gain. That gain is not, it is not short-term capital gain, and it is a regular gain. But what if it is a loss? If it is loss, it is no longer capital loss. It is an ordinary loss, so you can deduct it directly, offset your other income instead of only allowing for the $3,000 to come out. Now, let's really tackle of the process, because I'll tell you, you would not believe how many calls we receive. People are stuck in different point of time with this election. It's a mess, and you really want to hone it down to steps. There are 4 steps, folks. 4. Okay. Number 1, you want to make election timeline. We're talking about 2022, folks. So if you want to become a trader status mark to market for 2022, file election, electing yourself to be mark to market accounting method with your actual tax return on April 15 of 2022. So in 2022, April 15, which year are you filing? 2021, right? So to elect 2022 to be mark to market, and when you file your 2021, folks, you need to file that election with that 2021 tax return. So on April 15, you either file the return or you file the extension. Am I right? So if you file extension, you go with extension. If you file the return, it goes with the return. So for 2022 mark to market election, file election with your 2021 1040 on or before April 15 of 2022. Okay. Let's take a deep breath. And so the due date is what? Is April 15 of 2022 to file election. So your 2022 can be mark to market. We're not talking about 2021. We're late for 2021 already. So in that election, it is not any fancy forms, nothing too, impressive. It is just a statement you make. And to go with your tax return, you can put that in the front of the tax return and mail it out, or you can put that as a PDF file and attach your electronic filing and file it. So, but this is the language. In that statement, you can take a snapshot of this one if you want to write it down. So in that letter, you are going to put under IRC section 475F, the taxpayer, me, myself, of course, you don't write me, myself, you write your name and your social security number right here, elects to use mark to market method of accounting for my trade and the business of trading, my trade or business of trading securities. The first year for which election is effective is taxable year beginning January the 1st, 2022. So this will be done on or before April 15 of 2022. Got it? All right, with that paragraph, then you know that you finished step 1 of the 4 steps. Okay, 1 of the 4 steps, you're done. But of course, let's say, I put that in there just for everybody to know. Let's say you did a mark-to-market election in 2021, and then in 2022, you want to revoke it. You do the same thing, folks. You're going to send in the statement right now. Like when you file 2021, the end of the return, you're going to send a statement saying revoke the election effective January the 1st, 2022. And that election, that revoked request has to go into IRS on the same day like you make the election. Okay, now let's go. And when I go through all of these, I'll tell you what you're gonna do if you want to revoke it. Because yeah, we have people really suffered from the election. So now they want to revoke it, but there's a step to it. It's not like you can just revoke, like pretend it didn't happen, okay? Now, step number 2. Step number 2 is what we call the brokerage account update. You know, a lot of day traders that I come across, they do, a lot of them use Robinhood, TD Ameritrade, and so I use the TD Ameritrade as example right here for you. The reason I'm showing you the one I blacked out are the private information. So, but you can imagine those are numbers in there, right? So you want to contact your investment company like TD Ameritrade or Robinhood to update your investment account to be marked to market. So you made the election, okay? So now, right now we're still in 2021. Don't go there yet until 2022 arrives. Then you go to tell them that, okay, here my copy of my election, and I would like to turn my account to mark-to-market accounting method. Folks, that is a change you cannot retroactively restate. You change. It's like cosmetic surgery. There's no going back, folks. You can't be like, oh, I don't want my cheeks this way anymore. That's too bad. It's already done. So this is the same thing. Once you tell the I don't know, I'm still streaming. Why the screen changed? So Kat, can you answer my question?
It's still showing as the step 2 brokerage account update.
All right. Okay. I just don't see myself anymore suddenly. Okay. Looks like I lost my own picture.
Oh, we can still see you.
Okay. So, basically when you call them up to change your account status, that changed forever. And some people goes, okay, I revoked my mark to market, but my account didn't change. That is because you have to give up your account. You can't have the account converted back to a regular investor account. So now that's why I say for 2022 election, you want to call in January 22. Do not call now because you don't want them to touch your account for 2021 if your election effective in 2022. And after you're done, you should see the report like this, folks. Look at this report. It's no longer like what you used to get on 1099B. It is not that way anymore. And they give you this mark-to-market summary, tell you the total sales, the total cost, gain and loss. Simple, straightforward. But this is what you need as a step number 2 for brokerage account. You cannot do the election not doing this. Then at the year end, when 2022 come around, and you look at your statement goes, oh, Ying, I don't know what to do. I don't have 4797 numbers on here. Of course you don't, because you forgot to do your step number 2, right? So that's your number 2. All right, step number 3. This is 2 out of 4 steps. So what is step number 3? Step number 3 is to file form called 3115, okay? And when do you file that? That 3115 do not need to be filed in April like the election paper. And then the brokerage account also happens in the beginning of the year because you're changing the status. But 3115 is actually happens when you work on your 2022 tax return. When would that be? That will be 2023. So you don't need to do anything about Form 3115 until you are ready to file your 2022 tax return. So when you do that and you fill up the form, it is 8 pages form. Okay, I know if you go on internet, someone was telling you that, oh, don't worry about that form. You only need to fill in the first 3 pages and forget about it. No, there are information on this form. You must answer. I pull out one for you because this is very important for you to do. So I think on page 4, and the section 481 adjustment must be filled out. It is the difference between the amount of income you would have reported without the election and the amount you reported with the election. So you did a mark-to-market election. If you didn't do the election, you maybe cannot deduct all the losses. But because you did mark-to-market election, you are allowed to deduct $100,000 losses. So that is the difference. That means you actually reduced your income by $100,000, and you need to identify that, put that number there for IRS to see. IRS need to know the election you did causing what consequences. Okay, and the next page I have is another part of 3115. So here, this is the form 3115, folks. That 3115, couple of things I want you will see this. This is on the first page. I want you to know that the choice of DCN is 64. Okay, and this one actually, if you go on to 3115 instruction, it tells you what that is, but it's so overwhelmingly big and long, people couldn't find the number. So I'm just telling you, mark to market is 64. Okay, and here this is the changes. So check the appropriate box to indicate the type of accounting method you're changing to. So they give you a couple of examples here, and I would simply choose this, set mark to market, make it simple. Okay, so that is our number 3 step. Folks, remember we said that to file this one, and before you're ready to file 2022 tax return, which is in year of 2023. So that is your number 3 step. Number 4, this is the last step, folks. So when you do mark to market, there's 4 steps you do. And number 1, we already talked about, is the election. That need to be done way early, and it need to be done when you do your extension for the year before tax. Then you got your security, you got your brokerage firm account changes. We already told you that once you change that to market, there's no way you can revert it back. If you really think that, oh, I wish I have investment account, don't like my market account, and then the only way to do that is to set up a new one. Set up a new investment account and start trading all over again on your own, and don't mix them with the market, which is your day trading stuff, right? So then number 3 is this form. This form happens when you file your 2022 tax return. Before you file the return, or together with the return, you need to submit the form 3115. This last one, form 4797 part 2, and this is something that I got from IRS website. I just want you to know that a lot of times, you know, the stuff I was telling you, and if you think I'm genius, I'm telling you IRS is genius, because on that website, you can find everything. It is really just about what you're looking for. It's not that they don't have it. They really, maybe they're not just on the surface, but if you really know how to search, you'll find them. Okay, so here is my research. So the reason I pull it out, because I want you to know this form 4797 part 2, it is just for mark to market. Look at the last one. So the IRS instruction about use the form 4797 to report the following items, right? The last one is gain or losses treated as ordinary gain or losses if you are a trader in security or commodities and made mark-to-market election under IRC code 475F. Come on, folks. So clear. Now you're going to tell me that, oh, Ying, it's easy for you to say, but can you show us what is the form looks like? So here you go. All the black ones are the private information cannot show you, but you can imagine that those are all information need to be filled in. So the name, you should have your name on there, and identifying number, that's the social security number of the trader. And then part 2, folks, I didn't really put the whole form here because for whatever reason, I couldn't make the screenshot properly. So I omitted part 1. So this is just a part 2. Did you see that? Ordinary gain and loss. So that's a trader. And so we have attached statement of what gain and loss is. So then we fill in those numbers on the 18B. That is what income the traders is making. All right. So I want to just summarize up the mark-to-market election process. Okay, 4 step. Number 1, you make a statement, you send it out. Okay, and on our slide, we even have example the language that you use, right? So number 2, and you want to work with your brokerage account and to move that from a regular investor account to day trader and make that mark-to-market election accounting method. So they will do that for you. Once they did that, your statement looks so different. Actually, it's not as pretty as the investor account statement has all these boxes and laid out nicely, ordinary dividend gain, loss, and your interest and your tradings and all these 1099B stuff is gone. So what you see is very simple. Mark-to-market summary, your sale, your cost, and your gain or loss. Okay, so that is what you do. Number 2. Number 3, you want to remember 3115. You got to fill up that form. I'll tell you that out of these 4 steps, I think the hardest one is 3115. And you got to calculate. You got to calculate your benefit, or maybe it is to your detriment, and how much more income that you will generate, pay more taxes. But in any case, then you need to do that 481 calculation. Then the last one is your form part 2 of 4787. And you want to know that is your form part 2. And don't confuse with Schedule D. It is not Schedule D anymore. It is part 2, form 4797. And if you have a gain under part 2, 4797, you know what happens? You don't pay Social Security, Medicare. And it is a regular income, but doesn't subject to Social Security, Medicare. But yes, it's subject to the 3.8% that you need to pay if you're over a certain income threshold, right? So net investment tax, that's what it's called. Okay, so now we kind of got through, I pulled us through the 4 steps on the mark-to-market. I hope that really resonated with you and you felt like, man, I got it. And it just piece of cake. It's simple. And I want you to feel that way because procedures, okay, folks? I mean, in business, and you just have to really understand your procedure, and then you follow through the steps and you'll get where you want to get. But if you just, do 1 out of the 4 or do all of them wrong, you're just creating chaos for yourself. I tell you, I have people who come to me. I don't even know what to do. Out of the 4 steps, I'm telling you, every step was wrong. Every step was wrong. Then how do you fix it? It is really just, don't get there. Just really, do your fair share of the investment of time and read instruction. IRS tax return or IRS instruction is meant to be understood by laymen, by people who are not professional. If you just read it and don't get it, and I mean, read it again. I always tell my folks that when, our staff who come to work at a community CPA, the first time when they read government notice And I require them to read from the right corner all the way down to the left corner, and including the letter code and everything. Just read it, even though that doesn't even make any sense, because you only need to read that 3-4 times before you know, oh, they're all the same. Or you know that kind of letter when as soon as you read the first paragraph, you already know what happens in the next paragraph. So those are the procedures. Those just called procedures is meant to stay still for you to come to use it. So they don't change a lot, and they shouldn't change a lot, and except the president come around and they want to change everything, but they normally stays the way it is. So hopefully that 4th step just really made things clear for you. Okay, let me know that did that. And I would love to know that our webinar is actually making business better. And I did receive a phone call, wasn't yesterday, the day before yesterday. It is a California large restaurant franchise owner. And he called, and I, of course, don't know him, but he knows me really well from the webinar. So he said that throughout the pandemic, all of the things they did in their company were following the webinars that we have out there. So he said, you don't take the credit because you didn't even know, but I want you to know that everything we did, it was followed your webinars coming through. So, I was so happy, right? That's the best compliment you can get. That's our whole purpose. And we don't have the means to reach out to everyone that needed hope. Just not possible. But if our webinar goes out, can help people in that way, that feels good. Yeah. That is called one stone kills like 2 million birds, right? If I have that many subscribers, 2 birds, that's what the Chinese saying goes. What is the Chinese? That's English. So the Chinese would be, I forgot. Yeah, there's a Chinese term similar to that. I don't know how to say that anymore. Okay. All right, let's go for our next thing. So which is the mark-to-market election. Why people wants to do mark-to-market election? What's wrong with leaving the short-term capital gain just as business gain and just as regular income? What's wrong with just leaving the losses there and eventually I'll make enough money, I will offset them, no big deal. So yes, there's certain benefit to it. So let's just kind of go through. And it is vastly understood if you make mark-to-market election and if you have a loss, you shake away from that $3,000 confining cage. You don't just deduct 3,000 anymore. You deduct whatever the loss you have, right? So that's why this is literally the term I got from people who are doing those webinars about about tax treatment. They're calling that tax loss insurance. And so sort of saying that providing the kind of protection that if you have a loss, you can deduct it because it is your business loss. So you deduct all of it. Let's say I had a $100,000 loss, but I only have $20,000 gain. So after I deducted my gain, I'm still $80,000 loss. What am I going to do? In the ordinary time, you can go back 2 years. You can go back 2020, 2019, and to offset the taxes you paid with that $80,000 loss. And particularly in COVID time, and Trump's CARES Act came out, and that gives people to go back to how many years, folks? 5 years instead of 2. 5 years going back and to retract the tax return back and to offset the loss. And obviously during the 2020 year, so if you are so close to the stock market, I know the horror story about the the oil trade, and then the horror story about Lehman Brothers, and all of these things coming together had made some losses for some people. And then here, the mark-to-market would come in to bring that loss up to speed a lot faster than capital loss. And then also some people doing this wash sales, and when they receive the 1099-B, they look at their proceed, they look at their cost, then the third column goes wash sale. Wow, so much wash sale disallowed, and why I cannot take that loss, and then I still have to pay gain. Yes, I made some money, but my wash sale didn't really come in. That's not fair, and I didn't think I made that gain. That kind of feelings, right? So that is exactly how people will go, well, I don't want wash sale disallowance, and I just want to know what is gain, what is loss by market value at the end of the year. So I want mark-to-market election. I am a day trader. I qualify to be day trader. So that is why that happens. So wash sale is one of the place where a sore place, and people want to come out of that. And of course, the to do mark-to-market election, you make this business activity, so you can deduct the business expense, but the trading gain, and because it is under 4797 part 2, and so they don't subject to self-employment tax, only subject to 3.8% on the net investment tax. Okay, so that is also a benefit. So why people? So I have this thing, why people care about wash sales? And these are losses that I could not take this year. That is a true statement. The wash sale losses is a loss that you cannot take this year. And when you have a regular 1099-B and you see wash sales really clearly spelled out for you, okay? So if you got $300,000 on wash sale loss, yes, you cannot take that this year. It's not even part of the $3,000 losses. It's just not there, okay? So I used this slide one time before in my other presentation because I want to hone in a concept about wash sales, because I don't want you to equal wash sale loss to be lost. I lost forever. No, wash sales loss is not lost. So let's use this example. Hopefully it will get your concept straight, so you will be much more relaxed, thinking, okay, maybe I don't need to do mark-to-market election. So let's go for this example. On January the 1st, 2021, okay, this year, on the New Year Day, ABC stock, one share for $10. That's what you bought. You bought $1, you bought $10, one share. On March 1st, ABC stock went down to $5 per share. And you start getting antsy. You are like watching this thing go down and didn't feel good, so you sold it. So on March 1st, you sold it and you lost $5 already. Am I right? So keep that in your pocket. We know that we have a $5 loss right here. But on March 10th, some news released and the ABC stock went back up from 5 to 7. At this point, the news is so positive, you felt like no, I want to buy it back. So you went ahead, bought it back, $7, because you're hoping it will grow from 7 to whatever, even over, and it can cover your losses, right? That's what you're hoping. So because you bought it back, substantially the same stock, which is the same stock, you bought it back within 30 days, right? March 1st to March 10th is within the 30 days. So you incurred wash sales. So your wash sale losses now is happening. So that $5 you lost, the one you sold on March 1st, you know how you had a $5 loss? That loss you lost is not there anymore. It went into a place with a W marked on it, so you cannot deduct. So because you bought it back on March 10th, before 30 days is over, which is April 1st, and you bought it before April 1st, so your $5 loss was disallowed. So that is what you're talking about, the disallowed $5, okay? So Now, the loss you had between $10 and $5 is disallowed and as regarded to be wash sale, but it increased your stock base from $7 because you bought for $7, right? And from $7, increase that to $12. Why? Because you bought for $7, but you lost $5 before. So 7 plus 5 is 12. So in the system, in TD Ameritrade system, and your ABC stock on March 10th, the basis was not 7, was 12, because the wash sale went in there to make your base bigger. So now on March 12th, you sold it. And when you sell it, you sold for $20. So your gain is what? Your gain is not 20 minus 7 you bought. It is 20 minus 12. So you actually have $8 gain, not $13 gain. Imagine you didn't sell it on March 12, 2021. You sold that on March 12, 2022 for $20. And then your gain, this $8 will be a long-term capital gain, right? But right now you're selling it so quick, so that is a short-term capital gain for $8, already taking care of the wash sales. You really did not lose. But that $8 is already reduced it for you, that $5 you lost. So $8 will be a short-term capital gain, and you'll pay regular income tax for the short-term capital gain. So I want to go through the wash sale example with you just because I want you to take away, if for any reason you thought, oh, I lost it and my wash sale is wasted. You're wrong. It is not wasted. It is becoming part of your basis to calculate your real gain in the future. Okay, now, what is the disadvantage of mark-to-market election? So none of your gain will qualify for lower long-term capital gain tax rate. That is so true, okay? So Biden's tax proposal, it is changing the landscape a little bit, but folks, if you're listening to my webinar and, our firm is not a firm service big shots like Elon Musk, Bill Gates. They're not my client, okay? But you are my client. People who are running business from 1 million to 100 million is literally our client. We have clients largely in this range. So people in that range, and I hope that you will not be affected by what Biden was pushing out, because right now the proposal on the table is that the long-term capital gain cap 20% is going away when you have more than $1 million AGI. That's the proposal. So, but just let's pretend we don't know anything what's going to happen, because really we don't know, and that they are still working on it. And it's just like nothing is on time in White House. That place, untimely is the cup of tea. So everything is untimely. So it just takes time for them to make decisions. So making the tax people's life so hard, because, we're supposed to do tax planning for folks. And we're sitting here goes, what rate we going to be using, because we don't know. Okay, so the disadvantage is that once you made a mark-to-market election, you're going away from long-term capital gain. That is very attractive because it's 20% top. Do you know our regular income tax? What is the top? 37. So obviously you're going to pay less. If you pay 37% on income tax rate, then your long-term capital gain, the most you do is 20%. Okay, so loss of long-term capital gain, it is something set in stone. So that is a disadvantage of that. And you cannot, another disadvantage is that once you elect to be a mark to market, you are done. You cannot revert yourself back, goes, oh, I'm schedule D again. You know, you have to literally close that account. Your mark to market account cannot be reverted back to your regular investment account. So it's done. And, you know, not like marriage, you know, you can file, you can divorce and marry again. And I have a client who married 3 times to the same spouse. I mean, so that is retractable, you know, flexible in so many ways. I know you don't want me to say that, it's not flexible, but okay, there's, I saw one, I have one example to tell you that's flexible, but mark to market, no. When you go south, you don't come back to north unless you set up a brand new account. So that is what I want to relate to you. Of course, I want to show you this long-term capital gain tax rate table. I did 2020, and I actually just got this out from my prior period slides because you know, there is one proposal, there's one possibility that they are going to even change capital gain short-term, long-term deal and earlier in 2021. They don't even wait till January 1st, 2022. So we'll see how that works. But for sure, 2020 it was like that. And 2021 should be like this as well. If they don't retroactively back to do capital gain, short-term capital gain differently. So this is 2022 long-term capital gain tax rate table, you see? And, you know, basically says that if you're married file jointly and you have up to $80,000 AGI, like combined income 80,000, then if it is a long-term capital gain, you pay 0 taxes. And if your AGI is between 80 to 400, that's like $500,000, you pay 15%. That's very, very good rate. Then anything over is 20. So there's a lot of people, a lot of very wealthy people. Otherwise they pay 46% taxes or something. They have 20. But once Biden takes that out, put a cap on it, and then, you know, the wealthy people will pay more. Short-term capital gain rate. So short-term capital gain rate is going by the regular income tax rate. Just like you see how they go from 10 to 37. So here is the regular income tax rate table is also go from 10 to 37. So it's very, it's similar. It's same actually. And here, and the trader versus investor, right? We covered that. There's the difference between them in a simple term is between hobby and professional work. You know, hobby is investor, and the traders are professional. They're working daily, right? And, you know, of course, the, you know, you when you decide to do mark-to-market election, you should have already determined you are qualified to be a trader. Okay, and you know, here is, are you trader or investor? So it says that you lost your full-time job, stay home, quarantined, and sporadic versus frequent, regular, continuous. So these are the things you know, make a difference when IRS come to audit you, and they will say that, well, I don't think you are a trader. Mark to market is election should be none and void, and let's look at how much more taxes you need to pay and stuff like that. Then you argue based on that, you know, how you can qualify yourself to be a trader. The tax break for traders and the capital gain and capital loss, you know, we talked about it. Business expense, we talked about it. And the benefit to be a trader also is it is a business, okay? So you can deduct your expenses, you can purchase equipment, you can run payroll, you can do health insurance. So all of these things are, you know, business conduct would allow you for reasonable and necessary deduction, right? As long as expenses is reasonable and necessary, you had it made. So this gives us what I want to share with you guys today in terms of the content. So that's a mark to market. I hope you really enjoyed it. Know that what is most practical, beneficial for you. So this is where the YouTube channel is. So I hope that was a useful webinar for everybody. And we'll see you again on Tuesday. Goodbye.